October 2018 began a U.S. equity market reversal where the technology and momentum-driven market corrected. In the last 3 months of 2018, the S&P 500 lost 14%, and financial advisors, hoping that Dividend Aristocrat strategies could offer a buffer against some of that equity loss, were not disappointed. Hello, I'm Sean Wurzbach, leading the S&P Dow Jones Indices Financial Advisor channel, and joining me to discuss S&P Dividend Aristocrat's performance are Rupert Watts, he's Director of Strategy Indices at S&P Dow Jones Indices, and Simeon Hyman, he's Global Investment Strategist at ProShares. Welcome, gentlemen.
Thanks for having us.
Well, Rupert, talk us through the index numbers. I mean, we just talked about how it didn't disappoint, but how did we do against the benchmark for the S&P 500 Dividend Aristocrats and the S&P 400 Dividend Aristocrats?
Sure. Well, as we know, the fourth quarter of 2018 wasn't a great one for broad equity markets, and the Dividend Aristocrat indices also suffered drawdowns. However, the pullback that we saw in those indices was less drastic, and we saw some nice outperformance relative to their broad market benchmarks. Looking at the 500 Dividend Aristocrat Index, it was down about 8.6% in the fourth quarter, but outperformed the S&P 500 by almost 5%. Looking at the mid-cap Dividend Aristocrat Index, it was down 8.5% in the fourth quarter, but outperformed the S&P 400 mid-cap index by 8.8%.
Wow.
So some nice outperformance in those indices there, particularly in the mid-cap.
Yeah. So Simeon, we often talk about how our S&P Midcap 400 is a tough index to beat. It's really a sweet spot as we see it within the equity market. But we just heard Rupert talk about how 400 Dividend Aristocrats outperform the benchmark. What would you attribute that to over fourth quarter?
We know you're absolutely right. Midcaps are a sweet spot. They've been one of the top performing parts of the equity markets for several decades in a row.
Yeah.
But the 400 aristocrats have some particularly important properties. You know, if you look at any income statement ratio, they're all better in the S&P 400 aristocrats versus the broad index, and importantly, less leverage than the broad S&P 400, which can be important if the economy is slowing a little bit. But even before you get to any of that, just a simple rule set. To be in the club, to be in the S&P 400 aristocrats, it's a requirement to increase your dividend for 15 consecutive years. That means that every company in the 400 aristocrats increased its dividend through the financial crisis.
Right.
That's a lot of comfort if you're thinking that the economy's getting a little bit weaker.
Yeah. Now, Rupert, you've looked over the data. What really stood out to you over the last quarter?
Sure. What really stood out for me were the defensive qualities of both of these indices, and by defensive I mean they've tended to outperform their broad market benchmarks during periods of negative equity market performance. Defensive stocks tend to be well-run, higher quality companies, and this really describes the constituents of the aristocrat indices to a T. They tend to be having grown their dividends for 25 years consistently, is taken as a sign of corporate maturity and balance sheet strength, and as such means that they're hopefully well positioned to weather potential volatility. Furthermore, looking at the quality ratings of the Dividend Aristocrat indices, they tend to have a lot higher proportion of higher quality rated companies than their benchmarks. Looking at the 500 Dividend Aristocrats, around 60% of the constituents have a A- rating or higher, compared to only 33% in the S&P 500. Taking a more analytical approach, I like to look at the downside capture ratio, which measures the frequency of outperformance in down months. And the 500 Dividend Aristocrat tends to outperform 70% of the time in down months, and the 400 Midcap Dividend Aristocrat tends to outperform 72% of the time in down months.
Yeah.
So, some nice defensive qualities there.
And I think advisors expect that, but the question is, did they expect the fourth quarter? One of my colleagues, I remember he was showing concentration and he was showing momentum risk at the beginning of the quarter, but he kind of stood out. Like most advisors, I don't think saw it coming. So I'm curious, Simeon, as someone who talks to advisors a lot, what were you seeing in terms of implementation, and what were you talking to them about in terms of implementation with aristocrats?
Well, look, the defensive attributes of the aristocrats is quite well known in paid off in spades in the fourth quarter. But one of the other important things is the performance in up markets as well. If you simply have a defensive strategy, then you got to be able to call when times are going to go the wrong way. But the beauty of the 500 and 400 aristocrats is over time they've delivered over 90% of up markets. So you don't have to get the timing right. If you think about this, in 2017, the S&P 500 dividend aristocrats was just about flat with the S&P 500. And by the way, that's without almost de minimis technology exposure. And if you roll forward 7 quarters right up to the beginning of the fourth quarter of 2018, the S&P 500 value index, maybe you thought that was a good place to hide or to rotate to, that was 15%, not 15 basis points, 15% behind the S&P 500 for those 7 quarters. And then it only offered you 100 basis points of outperformance in the sell-off in Q4. The aristocrats had better downside protection, but also better upside participation, so you don't have to answer that timing question.
Yeah, that's just a great point. Well, gentlemen, thank you so much for your insights on dividend aristocrats.
Thank you.
Appreciate it.
If you want to learn more about how indexing works for S&P dividend aristocrats and other dividend strategies, please visit our website at spdgi.com. Thanks, and have a great day.